Hello, everyone, and welcome. If you're gearing up for your exams, you know just how vital it is to get your head around India's digital finance revolution. So today, we're going to break down the RBI's latest report on this very topic, making sure you have all the key insights you need. Let's get right into it. You know, just think about it for a second. Every UPI scan, every online loan application, it's all part of this incredible digital transformation. But this massive boom also brings up some huge questions about risk, regulation, and stability. And you can bet these are the exact kinds of questions that are going to show up on your papers. This explainer is really designed to give you that edge. So, we've structured this session to pretty much mirror the RBI report, which should make it super easy for you to take notes. We'll kick things off with the big picture, the core tension in digital finance. Then we'll look at a key survey of banks and fintechs, explore how all this affects customers like you and me, zoom out to see the bigger economic picture, and then wrap up with the absolute must-know takeaways for your exam. Okay, let's dive into our first section. The most important thing to grasp right away is this. The RBI sees digital finance as a balancing act. It's a constant tug of war between amazing innovation on one side and some pretty serious risks on the other. And this slide really lays it all out. For your exams, you absolutely have to understand this duality. The RBI sees it as a double-edged sword. On one hand, you've got all these incredible benefits: fresh innovation, more people getting access to finance, lower costs, and a way better customer experience. But on the other hand, you've got these growing risks, products that are getting super complex, huge cybersecurity threats, the danger of just a few big players dominating the market, and of course, a rise in financial fraud. So what do the financial institutions themselves think about all this? Well, the RBI actually went out and surveyed banks and non-banking financial companies, NBFCs, and the results from March 2024 are pretty eye-opening. Now, check out the difference in what's driving them. This is a golden point for a descriptive exam answer. You can see that banks are really focused on customer experience and just staying competitive. But the NBFCs, they seem to be more driven by internal goals, things like making their operations more efficient and managing their own risk. It's a subtle but really important distinction. And this number right here, 44%, it just screams how fast this change is happening. Almost half the banks surveyed expect to get over 50% of their deposits through digital channels in just the next 5 years. That's not a slow change. That's a massive, fundamental shift in how banking in India works. This quote from former Governor Das really hits the nail on the head. The arrival of fintechs has completely shaken up the old way of doing things. They are challenging the traditional banks on every single front. They're grabbing market share, they're squeezing profit margins, and they're winning over customers with these slick, super user-friendly services. So, this brings us to a key term you absolutely need in your notes: disruptive fintech. See, this isn't just about making banking apps. It's about using powerful new tech like AI and data analytics to completely rethink how finance works from the ground up. A perfect example is peer-to-peer lending platforms. They connect borrowers and lenders directly, totally cutting out the traditional banks from the process. Okay, so with all this disruption flying around, what are the banks and NBFCs actually worried about? The RBI survey asked them, and their top 3 concerns are absolutely crucial for your notes. And hey, to make it even easier, we've got a little memory trick for you coming up. Here they are, the big 3. Cybersecurity threats, data privacy issues, and the risks that come from relying on third-party vendors. Now, to lock this into your brain for the exam, just remember the mnemonic CDT. Think of it as cyber dangers threaten. C for cybersecurity, D for data, and T for third-party risk. Super easy to recall, and believe me, it's a high-value point. Of course, all this tech and all this risk, it ultimately lands on the customer. So let's pivot and look at this from the end user's perspective, which, as you can imagine, is a huge focus area for any kind of regulation. The incredible convenience of digital finance can actually create new problems. Things like buy now, pay later can easily lead to impulsive spending and even debt traps. Then you have social media, which can amplify financial trends and lead to this dangerous herd behavior where everyone rushes into the same investment at once. And on top of all that, you've got the constant worries about data security and falling for these increasingly sophisticated cyber scams. And if you want to see just how real that data privacy issue is, just look at this chart. It's pretty staggering. Around 74% of these financial apps want access to your photos, media, and files. About 73% want to track your location, and 42% ask to see your entire contact list. It's this sheer scale of data collection that explains why the RBI is so laser-focused on privacy. So to fight back against these risks, the RBI has put this Charter of Customer Rights in place. You should definitely be familiar with these 5 fundamental rights. They're basically the foundation of consumer protection in this new digital world, making sure you're treated fairly, that deals are transparent, the products are actually suitable for you, your privacy is respected, and that you have a clear path to get your problems solved. All right, let's zoom out now to the 10,000-foot view. How does all of this digital activity affect the stability of the entire Indian economy? And more importantly, what is the RBI actually doing about it? This table does a great job of showing the big picture trade-offs. Over in the benefits column, you can see that fintech can decentralize the system, make it more efficient and way more transparent. But then you look at the risks column. This deep interconnectedness also makes the whole system more vulnerable to cyber threats, creates risks from relying on third parties, and introduces this scary possibility of rapid algorithm-driven contagion. So, how's the RBI stepping in? Well, this slide shows its very active multi-pronged strategy. You've got the digital lending guidelines from 2022, which are all about protecting customers. Then there are the strict IT outsourcing directions, which even have a rule that cyber incidents have to be reported within 6 hours. And most recently, there's the new framework for a self-regulatory organization for fintech, or SROFT. And that SROFT concept is another key term to understand. It stands for Self-Regulatory Organization for the Fintech Sector. This is the RBI's really clever, nuanced approach. Instead of just dropping heavy-handed rules on a super fast-moving industry, they're creating a framework for the industry to police itself. But, and this is key, it's all under the watchful eye of the RBI. It's all about finding that balance between letting innovation flourish and making sure everyone acts responsibly. All right, we've reached the final briefing. Let's pull everything we've talked about together into the most critical, high-yield points for your exam revision. Think of this as your final checklist. First up, the big ideas. Remember the duality, benefits versus risks. Know the different motivations for banks and NBFCs. Understand that the relationship with fintech isn't just one thing, it's a mix of collaboration and competition. And for the customer, the key tension is convenience versus new risks like herd behavior and data privacy. Next, the hard facts and figures. Don't forget the top 3 risks, are mnemonic, CDT, cyber dangers, threaten. And the key data. 44% of banks see over half their deposits going digital soon. 33% expect the same for lending. And remember that wild statistic that almost 74% of financial apps ask for access to your photos and media? These are the numbers that will make your answers shine. And finally, the RBI's response. These are prime candidates for direct questions in your exam. You need to know about the digital lending guidelines, the new SROFT framework, the Charter of Customer Rights and its 5 core principles, and the integrated ombudsman scheme for solving customer complaints. Know what each of them does. And we'll end with a thought for you to chew on. This really is the central question facing the RBI and policymakers right now. How do you keep the entire system safe and stable without accidentally killing the incredible innovation that is fueling India's growth? Finding that perfect balance, well, that's the great challenge of our time. Thanks so much for joining this explainer, and all the very best for your exams.